Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Tuesday edition, Taco Tuesday, Trivia Tuesday, all the above. Hope you had a fantastic trading session out there. I know I did. Damn good day. No active day trades, but just watching the markets today with some good stuff. Today's show is going to be driven from a viewer. I had one of you ask a question, which I thought was really good, and I thought, you know what, let's go into a topic that I don't cover very often. You know, when we do this show, I'm typically going to talk about broad markets, but not kind of get into the nuts and bolts. And, Gary, it was Gary's question today. So here's what we're going to talk about. Comparing markets. I'm going to go through kind of the top 5 markets, and I'll run through those here in just a quick second. But essentially, what Gary asked me was, how about a review of Forex versus futures versus stocks for the beginning trader? Pros and cons of each, using core strategy for each asset class, which is most reliable for reaching income goals. Okay. A little bit out of focus. Yeah, I noticed that yesterday. I got to get my buddy before he leaves for vacation. It's weird because it's on manual focus, so if I go back, it changes depending on where I'm sitting. So I kind of want to go back to a manual focus, but that is a whole nother can of worms. I'll just keep myself off camera. That makes it easy. So this question, I added to it because he kind of one of those 3, Forex, futures, and stocks. But I think it'd be good to go deeper into, do things like we'll look at cryptocurrencies and digital assets. Certainly going to look at stock markets, equity markets, how they perform, what are the pros and cons of each one. We'll look at Forex, and particularly the spot Forex market, not necessarily talking about, well, we can look at the future side of things as well, but the spot Forex market. And I'll compare and contrast what the issues are for you between those two. Looking at futures as well, all the different commodities. This is, probably the most diverse market out there with regards to what you can access, from interest rates to bond products to softs, grains, wheat, soybean, corn, metals. I mean, it's crazy how much can be done here. So we'll talk about futures markets, and of course, we'll take a look at options markets. So I wanted to start with a simple table. And when I look at the tradability of something, first off, I want to make sure I am not here to push anyone into a specific asset class. I personally would say I think it's really important for you to know all of them and how they function. Now, you may not trade 1 or 2 or 3 of those markets, but you got to know how this piece impacts this one and vice versa. I always go back to that analogy of a watch. You open up that watch, an old classic watch, and there's all these cogs. Without it, it doesn't work. Once you understand them all, though, now you can tell time. And I guess that's the goal of everyone, is to tell time, which in this case equates to making money. So I'm looking at it from these 5 markets: stocks, futures, Forex, options, and crypto, from, I think, 7 different perspectives, 8. Initial capital, meaning how much money do you need up front. I want leverage, meaning what kind of borrowing do you get. Trading times, liquidity, volatility, regulation, complexity, costs, and risk. So I have 9 categories on here. I'm going to break these down kind of one by one for you, and then feel free to join in here as well. If I know we have groups of you that are specialists in what you do, and I have no problem at all with that. As a matter of fact, I think that's actually the preferred way to go. If you find that you've got a niche and something that you like really, really well, and you're successful at it, don't switch, don't change. I think the more we learn about markets, the better it makes us at that specialty. But I'm going to cover all of them today. So, as you see, a lot of options favorites in here. We got Thomasina, Liz, Lori, Big Eb, all saying options the way to go. Well, we'll see if how that progresses. So let's talk about initial capital, meaning how much money do you have? This is a sore spot for a lot of people. One of the things that I don't know whether I'm depressed or sad about it, but quite often when someone would come in and want to take a Forex class at Trading Academy, you want to get to know them. And I'm not going to encourage someone to go into an asset class that is very risky for them and their financial well-being. And a lot of times the reason people want to go into Forex is because Forex gives you incredible leverage, which I'll talk about here in a second. So you can start off with just a little tiny little bit of money. Well, usually if you only have a little bit of money, you shouldn't be gambling it away anyway. So I'm going to start initial capital. I put stocks. The initial capital required for stocks is high. Now, some places require a $500 minimum, but let's be honest. What are you going to do with $500 in the stock market? I mean, even if you went into, triple leveraged ETFs, you might be able to buy yourself a couple of shares worth of it. your rate of return is not going to be that great. I don't know. I feel like the capital requirements for equity markets are very high. Typically, it's 1-to-1. So if you have a $10,000 account, you get $10,000. That's a cash. If you go overnight, depending on the brokerage firm, you can get 2-to-1. So now that $10,000 turns into $20,000. And if you have over $25,000, you can get 4-to-1 intraday. So that $25,000 now becomes $100,000. Now we can really swing some weight here and get better rates of return if we're on the right side of the trade, of course. So, stocks is expensive. With futures as well, depending on which contract you're trading, you might not be able to trade full-size contracts or something like the S&P or the NASDAQ, right? It might be too expensive for you. So, I recommend if you're starting out as futures, you're looking at probably $5,000 minimum to start. The good news for most people here is that during the day, if you're intraday, you can get some of these contracts like an S&P E-mini for $500 worth of margin, meaning at $1,000, you could trade 2 contracts, right? So you do get some leverage there, which we'll talk about in a second, but it's a lot less startup capital. I think the important part here is understanding the times of the day and where those cutoffs are for margin requirements with regards to how much you need to pony up for each of these futures contracts. The other part of it, which makes it, I'll talk about complexity later on. Forex initial capital, extremely low. I know some brokers are saying you could just deposit $100. Look, man, if you're trading $100 worth of Forex because that's all you got, go away. Just literally stop. Go away. You're better off going to the local casino and playing because you're going to be just leveraging yourself to the hilt, and it's just not worth it. Next, options. Medium. You don't need a ton of money here. Depends really what you're doing. If you're buying options, obviously you just need enough money to cover the premiums, but $1,000 may not be very much with regards to those premiums. If you are a seller of options, then you are kind of on a financial obligation to take delivery of those shares or have them take away from you, and therefore you need to have a bit more money in your account if you're going to be very active with options. And then you have crypto. I should just put like almost non-existent. You could trade with a fraction of a penny. If you're going through Coinbase, might be problematic. But if I use something like MetaMask or a DeFi wallet, I could literally trade with $1. It's really just, I don't have to have much money at all. Now, again, what are you going to do with $1? Well, at least the movements of the crypto markets are generally more significant than the equity markets. So stocks move relatively slow. Crypto, as we've seen over the past couple days, incredibly quick. All-time high again for Bitcoin today, and then selling off near the end there. But just a really fun, volatile day for crypto. But that seems to be a synonym for cryptocurrency now, is fun and volatile. We're at 92,000. We broke 93.5 today, 93.6. Good one. So that is your top category, is money. How much money do you need? And if you have very low capital, you have very little capital to start, it's tough for me to say which one, but I would think that you're probably looking at futures or Forex. The good news is now you have micros in the futures market to trade things like Bitcoin, S&P, oil, etc. So that makes it nice. No, Degree. Don't get me wrong. I'm not anti Forex. You have to hear me out. Oh, yeah, I definitely don't want to. I'm anti Forex in the sense of I believe it can be a place for people to go and gamble. And we'll talk about that in this next line, which is leverage. So with leverage, I mentioned 4-to-1 max in the stock market. I think that's actually, believe it or not, some of you are going to hate this one. I believe that's a good risk management tool. This all changed back in 2000 when a guy walked into a trading floor in Atlanta and shot a bunch of people. Why did he do that? Because the trading floor gave him extended leverage. They didn't talk to him about the risks of shorting. He shorted a stock on huge leverage. It shot through the roof. Not only did he lose all of his capital, but he got a bill for hundreds of thousands of dollars extra. He went in there and just started shooting people. So the regulators changed the rules on margin for equities back in the late 90s, I think it was 2000 when that happened. We had armed guards on our trading floor after that happened. It was crazy. We're all looking at the people on the floor like, who's our shooter? We had one guy. Everybody called him Shooter Ray because we thought he was the guy who was going to be the shooter on our trading floor. So we all kept an eye on him. Anyway, moving on. Futures markets. You can, depending on which vehicle, get fairly decent leverage. Typically, you're looking about 10-to-1, but some products you can actually get higher leverage than that. They say it's 50-to-1, but typically 10-to-1. You look at Forex, you have 50-to-1 leverage in the United States, right? That's your max you can get here in the U.S. But if you go international, you can get incredibly high leverage. I've seen 1,000 to 1 leverage in Forex markets. Now, again, if you're a really good trader, if you're someone who was really good, this is awesome. The sad reality is most newbies will go to Forex because, oh, it has tremendous leverage. I can come in with $100 and I get 1,000 to 1 leverage. This is going to be awesome. And all it takes is one tiny little trade. You understand the power of leverage. If you have 1,000 to 1 leverage and it goes against you just a little bit, your account just is gone, evaporates. It's just like, what happened? The YouTube videos are full of these guys trading interest rate decisions in Forex markets. And they're all excited, and all of a sudden you can see within 10 seconds they go from joy to down hundreds of thousands of dollars. It can happen with 1,000 to 1 leverage, so be extremely careful. Thank you, Jeff. Glad you like it. You can thank Gary for that one. Gary B. He wanted this topic for today. Again, I do the show based off really what you guys like to discuss, unless there's something pressing that I want to go into. So I love when you guys send comments. And Gary, I wanted to do it yesterday, but this took me a bit of time to put together. So apologies, it took longer than I thought. Jordan said in his futures class last week, futures can get up to 300 leverage. Possibly, I need to look into that. I'm not sure which one. Oh, great, my chat was disconnected. I'm not sure which one would give me 300, but I'm not going to say that it can't happen. I don't know. Possibly. All right, back to my table here. I want to make sure I get through all this so I can dive into other questions. Now, we get to leverage with options. You're looking at roughly, again, it really depends on the instrument, but roughly 10 to 1. So I would put this, similar to the futures category. Now, of course, I know some of you are going to go, well, what about options on futures? I don't know. I don't do that. Not for me. Leveraging crypto. All right. So let's just be clear here. In the United States, you get zero. You get zero leverage in the United States. You are not allowed to use margin and leverage in crypto yet. Maybe that'll change in the future with some regulation. Internationally, I've seen over 100x. So again, very risky. It's all leverage is amazing if it's going in your favor. If it's going against you, it can be shocking. Trading times. Oh, this one for you insomniacs out there is actually a pretty big deal. And yeah, I'm a big fan of the trading time. So number one is stock market. I put market hours here. Typically stock markets, guys, in the United States are 9:30 to 4 p.m. Eastern time. 9:30 a.m. to 4 p.m. Eastern time is the market hours. We can trade a couple hours before and a couple hours after. That's extended hours trading. The problem there, as we've shown you many times, is the liquidity, right? The amount of transaction going on outside of market hours is just not worth the risk. I use the analogy of a swimming pool all the time. You look at something like Microsoft, which you could jump from, the 10-meter platform and swan dive into the water. You're not going to hit the bottom. Do the perfect dive. You're not going to hit the bottom of that Olympic-sized pool because there's so much water in it and it's deep. But if you trade at let's say markets close at 4 p.m. and you decide to trade Microsoft at 6 p.m., imagine taking 99% of the water out of that thing and still jumping from the 3-meter board. You are going to, actually 10-meter board, let's do 30 feet up. You're going to break all the bones in your body hitting the bottom of that pool. And I look at trading the same way. You got to be really careful, and not just for the equities, but always know the hours and the times that you are trading and know what the liquidity is at those periods of time. Okay, so stock market may change here in the future. We talked about the equity markets going almost 24 hours. I think they're going to make them like 21 hours or 22 hours. Futures, well, almost 24/7. We have a little bit of a rollover period, right, which is just when contracts are getting adjusted. It's a small window of time, but pretty much 24/7. Again, on the weekends, things dry up significantly and after hours. Forex, 24/5. Well, even that's not true. There is a reset period for Forex, so it's not 24. It's like 23.75, and it stops Friday afternoon. So Forex markets are going to stop. They're closed really between Friday afternoon, Friday evening, and Sunday evening. So there's this 2 days where they are closed. So be careful about that one. Options. Well, those are going to be pretty much market hours. Now, there are extended hours trading now for some of these options, and that may continue to grow as the stock market hours open. But I think in general, whatever the stock market is open, options would be open that as well. And then finally, crypto, my favorite, because it is a true 24/7. There is no debate here. Crypto wins this argument. Sounds like a tide analogy. We have 24/7 trading, 365, no resets, no pauses, no nothing. The only time you actually have issues with crypto is if your exchange is bogged down. And we saw that a lot last couple of weeks when these markets were just going haywire. Markets were bogged down just a little bit. All right, volatility. Let me read these comments here. I found 1,000 to 1 X DeFi, and it was bad because it restricted your stop and limit orders to a small amount so that you'd tag out of either winner or loser quickly without being able to trail. So basically a gamble. Exactly. That's my point, Chad, is I think if you're using 1,000 to 1 leverage, it's almost beyond speculation. I mean, it's crazy. Yes, there are options, not all. Again, different options trade at different times. So yes, if you have options on futures, then they're trading during futures hours. Correct. Yes, Lori. Yes. So and that's a newer revelation as well. Having these options on futures. All right, volatility. Good. Great comments, guys. Isn't futures closed on the weekend too? Yep. Yeah. So I should say 24/5 on here as well. Let me fix that. I don't like having mistakes on my screen. I don't know why I showed that one. Hold on as I change this one. Let me fix my little mistake here. That was the 24 because I don't want that to be. That is a pretty glaring mistake. That's what I get for rushing. All right, we're gonna go 24/5. Okay, and let me put that back where it came from. Boom. Oops. Great. My table almost looked good. There we go. All right, volatility. I put stocks moderate, and you guys understand what the problem is here with this one. The real challenge with stocks is what stocks are you trading, right? So I could make the argument that something like Ford is not that volatile, and you'd say, well, it's low volatility, and then I could say 23.5, and then I could say, well, what if we went to something like MicroStrategy or DJT, which is extreme volatility, right? So it's hard to generalize an entire trading market as one degree of volatility. I would argue that it's moderate, really depending on. Thanks, Lori. Yeah, moderate. Futures, I put high, and again, it's just because of international drivers of price. These markets are all over the world. You got cocoa from Africa. You got coffee down in Brazil. I mean, you have different markets around the world with different participants, which can cause more volatility, particularly in the after-hour session when liquidity is a little bit lighter. Now, again, depending on what you're trading, volatility could be significantly higher as well. But in general, I would think that futures are going to be slightly higher volatility. There we go. Forex markets. High volatility as well. Because we have such international market movers and demand pushing, it doesn't look like volatility because, each contract represents $100,000 typically. I know it depends on the currency, but overall Forex is actually fairly volatile. Options. Again, this one I think I put depends. You have high volatility, but that's not true, is it? I think we could all make the argument that you could set it up. You could set your options trade up so the volatility is rather muted. All right, you could use options to take volatility and squish it so it doesn't become as volatile doing spread trades. So, I feel like this one's probably the biggest mistake on here. If you are looking at percentage rates of change over a short window of time, I can make the argument that options are highly volatile. Right? If you look today, just looking at those. Just the call options I had against let me real quickly check it here. Guys know I sold, what did I have on? I didn't have those ones. I was thinking my Rivian shares today. Looking at the SMCI premium, that changed dramatically today. I had call options on my Rivian, right? I sold the 1150 calls, and let's see, just today alone for a small, it's a 36% change in one day. And for options, that's actually rather normal, right? It can be very, very volatile depending on the options contract. But from a tradability perspective, it's why people like Larry love, weekly options or zero DTEs, because you can get tremendous rates of return in a short period of time. But again, it can be rather risky. Oliver says Microsoft contracts or MicroStrategy contracts are expensive. Yeah, absolutely. Yes, John, I tweeted out about that today. Starting today, we have options on crypto. You guys can now trade options on IBIT. I was watching that today. It's funny because I actually almost pulled the trigger. You can get the premiums seem pretty good on those IBIT options today. All right, how am I doing for time? 22 minutes already? Oh, I'm going to keep moving. Crypto, there's no argument here. I think everyone agrees incredibly high for crypto. Just insane. It's just the most dangerous one. Liquidity, stocks. Okay, just like me making the comment that something is volatile as a whole, that's very hard to do. Because, as you know, we could pick a stock that has low volatility or low beta. You could have something that has a very high beta, extreme volatility. It makes it very difficult. Now, if you're trading something like Tesla, Apple, Microsoft, Intel, you have pretty significant liquidity. But if you're trading something like Sound or a smaller stock that doesn't have a lot of liquidity, obviously it's not the same across the board. There is no set standard of liquidity in these markets. So that's why, one of the things I would encourage you to do if you're trading stocks is run a stock filter and look for a minimum of 1.5 million shares traded per day. Also, if I'm trading options, I want to make sure that the underlier that those options are traded on have 1.5 million at least. I know a lot of you look at open interest for the option. I want to make sure the underlier has a lot of liquidity as well, because we could see dramatic changes in the value of the underlier if it has low liquidity. Right? Moving on, futures liquidity, generally very high. If you're trading the major stuff, it is. But look, if you're trading live cattle futures, not much liquidity at all. So again, look at sections 5 IV equals short option. Yes, get that premium, sell them. Gotta love our IV gauge, right, Tofi? So very high liquidity, particularly with the majors, your S&P, NASDAQ, Russell, Dow. But there are products that are very thinly traded, so be careful. Always check your contract specs. Later on, we'll talk about the complexity of these markets, which I think is a big factor for me. Harder to short stocks is an important point to consider. Yes. So typically, if something has extremely low volume in the stock market, you can't short them. Liquidity is certainly a factor there, but it's also the master borrow list. So your broker has a list of securities you can and cannot borrow. If something trades 10, 15, 20 million shares a day, you can borrow it. No need to check. It's easy. But if something's thinly traded, you may have problems trying to get a hold of whatever security that you want to get. Let me say, for example, I'm going to go out here to this losers category. Let's go our biggest losers today. Just to give an example, let's go to... Oh, these are all pretty liquid. That's JP Morgan, Deep. No. 10-cent holdings, actually not too bad. No, these are Bank of America ADRs. I'm trying to find a stock that might fit our category here, which you can look at and just go, oh man, that's just highly illiquid. Yeah, here's IDCBF. This is the Industrial and Commercial Bank of China. It trades 1,000 shares. There's no way you're getting options on this. No broker will let you borrow this share. There's just not enough liquidity. It's just too dangerous for them to do. So again, running a filter for liquidity can certainly help you find those ones that are shortable as well. I just checked the Bitcoin on IBIT, and there was no open interest, of course. Surprised, I didn't look at the open interest. I was watching there should be open interest on that one today. I'll check that tonight. Let's go through liquidity. Keep going. Forex. Very high liquidity. Now, again, only if you're trading the majors. If you're trading a U.S. denominated currency pair, the euro against the yen, or euro, yen, pound, those are incredibly liquid. But if you're going something like the Japanese yen, South African rand cross pair, liquidity is going to be an issue. Again, so if you're sticking with the big liquid stuff, incredibly liquid. If you're sticking with these obscure cross pairs, you should be doing that. Either way, very, very volatile. Let's see, liquidity of options, again, depends on the option contract, depends on the strike price, depends on the expiration, depends on the security. So this was the most variable of them all, would be the options market. And then crypto liquidity, I also put variable because it's rather unique. With crypto, we're not looking, it's not centralized. There is no centralized exchange where all of crypto is traded like stocks are, right? If I buy Apple, I know that Apple is traded on the NASDAQ, and therefore all the liquidity is pointing there. So if I open up a Schwab account or open up an E-Trade account, I'm going to access that same pool of liquidity ultimately. With crypto, every exchange is its own separate pool of liquidity. To me, that is a difficult thing to deal with. You have to know what the liquidity is at your broker. So if you use Coinbase and you want to be trading Bonk tokens, you better check the liquidity first, because your small little order on Bonk could have a huge move. Now, of course, Bitcoin on most exchanges is fairly liquid, but others might not be. All right, I'm almost there. Regulation. Stocks, highly regulated. Futures, highly regulated. Forex, there's still some gray areas in the Forex market, which is why I'm a little skeptical on spot Forex trading. Options, highly regulated. And then crypto, not regulated at all, right? Not regulated at all. I was going to say the same thing, John. I think that maybe you have to wait and see tomorrow what the numbers reset as. Don't traders do arbitrage on crypto? So here's the truth of the matter, Margaret. A trader like me, no. I'm not fast enough. But what are set up are algorithms to do arbitrage, right? So there are mathematical equations that will look at all the different exchanges. And if they can buy Bitcoin, I'm going to just make up an easy number. If they can buy Bitcoin on Coinbase for 92,000 and they can sell it on Kraken for 92,500, they make $500 per Bitcoin. Done like that. So yes, but those are done so quickly, and they're monitoring all the different exchanges around the world. That's all algorithm based. And some people might look at that and be disappointed that that opportunity is gone for you and I. Don't. You should look at it and be excited, because these algorithms arbitrage it and keep everything relatively the same price. If we didn't have these algorithms in place to buy on one exchange and sell on another, when there's inefficiencies of those markets, then the volatility would be way wilder on the exchanges. So these algorithms have actually slowed down these markets. Yep, arbitrage is one of the things that got Sam Bankman-Fried started. Yep, absolutely. It's funny, when I got started in 2017 looking at these different exchanges, it was thousands of dollars difference from one exchange to the next. It was crazy. We actually tried a Gary Christmas, my buddy and I, we were sitting there in 2017, and we bought it on Poloniex and then tried to flip it over and sell it on Coinbase. But, by the time it got there, there wasn't as much meat on that bone. It disappeared quite a bit. Can't wait to trade those options. I know, me neither. Forex, they aren't any central exchanges. Correct, they're not centralized. You're typically, when you trade Forex, you're going to a bank, an institution. So like, Deutsche Bank can have their own Forex desk and their quoted prices. So the bid ask, the prices you get from Forex markets are going to differ depending on where you're trading them. All right, complexity. Sorry, I got so much to talk about here, and I'm hoping this helps. I'm hoping it's informative. Complexity. Stocks, easy, man. Come on. Really, the only difficulty with the stock market is if you dive into the fundamentals and understand what the company does, how it operates. But I'm looking at this from the perspective of, how do I buy? How do I sell? How do I make money, right? That's what I'm looking at as complexity. Futures. I put complexity as high because every contract specification is different, right? The S&P contract is different than live cattle versus soybeans. Times are different. The points, the pips, all that stuff is different. And it just really it's challenging, which is why when I trade futures, I really just stick to a handful of things that I know. We had Jerry Baldwin on the program a few times, and I think he trades 6 instruments. That's it. And you're like, what? But Jerry, there's dozens of other amazing things that move. And he's like, I don't care. I've got these 6 that I know really well. I know every time I pull the trigger, I don't have to think about how much money it is per tick or what the contract margin requirements are. If you're trading dozens of different futures products, your head's going to spin. I'm sure many of you are already in that boat where you're going, I can't think of all this stuff right now. So very high complexity for futures. Forex, moderate. Again, you have some pip conversion. How much is each pip worth? Know those types of details. So it's a little more complex. Options, I would say extremely complex. Extremely complex, because you could go long, you could go short options. You could have strategies where part of those strategies are offsetting each other, and all of a sudden you're making things really complex. Iron condors. I mean, come on, you want to make your life complicated? Go with an iron condor. Go for it. Too much work for me. Crypto, I say low, very low. Basically, with crypto, you just hit a buy button, a sell button, and you're buying at a price. I would say it's like stocks. You're just looking at the price. I think this price go up. I'm gonna buy it. It's like if mice and men, Lenny, tell me it's gonna go down. I think I'm gonna short it. Not much to do there. And, that's what a lot of the speculators are doing on these meme coins, Shiba Inu and Pepe. It's just, I think it's going to go up. I'm going to buy it. But there's nothing else that makes these shares any different than others. So there we go. For options, you need to understand the Greeks. Definitely need to understand the Greeks. Liz loves iron condors. Whatever works for you. Well, I found it was always complicated for me. Let's talk about costs. So costs for stocks is low. Most places don't even charge you anymore, right? They're giving you free trades for stocks. This is great, especially for those who are active in the equity markets. Futures, moderate. It's not dirt cheap, but it's not that bad, right? Do you like the Forrest Gump impersonation? Mama says this is my magic crypto. Forex, low cost. Generally the area they get you with Forex, guys, is they can get you one of three ways. They'll charge you a flat commission fee, they can charge you a percentage fee, or they just widen the spread and you're stuck with the big spread. And that's where I see most of it, is the spread getting bigger and bigger and bigger. Oh, Corey's constantly teasing Lori about her iron condors. Hey, you know what? Corey's got his little things he does too. It's great. He's got his little. We've all got our quirks, man. We all have our quirks. And let's see, almost done. Options with regards to cost, moderate. Depends on the strategies you're going to do. They're really not that expensive to control. As much as you do, it's not that big of a deal. Crypto is very low, and again, this really all depends on what platform you're using and how you place your orders. So, for example, if you guys use Coinbase, when you go to their website, has a basic page. You're going to pay about 5 to 7% in transaction fees to use the basic page, but most people have no idea. If you use their advanced platform, you're going to pay 1.2%. So, people just don't understand how it works. They don't know the basics, and they're going to, a lot of suckers paying a lot more money. Typically, it's going to be low. If you use something like Kraken or Gemini, it's going to be 0.4% on transactions. So, not too bad. Risks, I would say with equity markets, low. Again, if you're aping into MicroStrategy or DJT or BKKT today, risk is incredibly high, right? Maybe this is where you want to use ATR and volatility and beta to help you understand what the risk of those stocks are. But in general, fairly low. I spend most of my time in the stock market with ETFs now, most of it. Futures, I would say moderate risk. Again, the leverage side of things increases that risk. With the Forex, I would say very high, particularly because of the leverage. Options, depends. You can have some strategies which are very low risk, which are the ones I like. I guess I'm really showing my age because now most of my options are done very low risk trades that, I'm just trying to generate consistency with options, which is, we'll get to my preference here in just a second, but depends on what strategies you're using. Crypto, and I should put off the charts high with regards to risk. Not only do you have the risk of the volatility of the crypto, but losing your private keys, of getting hacked, of smart contract risk. There are a lot of challenges here with crypto. So, where do I rank these? Right? Which one would I go with as my least favorite? Okay, so let me put these in order here. So I'm gonna go. I think I got them down. I'm gonna go 1, 2, 3. Okay. So from a tradability perspective, I'm talking trading. I'm not talking investing. I'm talking active trading, whether that's daily or monthly income. Trading. What's my least favorite asset to trade? Oh, I got to get past all these entries on my table over here. Here is my 5th place. It's an easy one. It's a no-brainer. Oh, come on, Merlin. I got to get the graphic up there. Jeez Louise. There it is. 5th place. Crypto. I'm not a fan of trading it. I don't want to trade it. Our rules in America suck for trading crypto. They're terrible. You can go out and you can use the active trading platforms at Binance. You can use the active trading platforms at Kraken and Gemini. They're not great. You're just using TradingView, and you don't get leverage. And you have a fragmented market of liquidity. So for me, hands down, the worst to actively trade is going to be cryptocurrency. Second on this list is going to be Forex. I say spot Forex. Okay, let me be very clear here. Spot Forex markets, not the futures. The futures actually I like. If I'm going to trade futures, I'm going to trade if I'm going to trade Forex, I'm going to trade the futures side of things. Now, in my younger days, I was enticed by the 100 plus. At the time, it was over 100 in the U.S. Then they dropped it back to 50 in like 2006 or something. I don't think it's worth the risk because I've watched shenanigans, and I mean shenanigans go on, but on the part of brokers. Whether you're trading Owanda or Forex.com, I've had trades stopped out. When I look at the chart, it never got to my price. It never touched it. And they go, oh, well, because we do an average between the spread. Like, yeah, that's BS. So you get low liquidity, you get really odd fills. Remember, you're trading against a small batch of liquidity, not the global Forex community. There isn't a place to do that. So 5th place is crypto. 4th place is going to be Forex. Let me see. 3rd place. Okay. 3rd place is the stock market. And the reason I put this 3rd place is it's just too expensive. It's just too expensive. You know, you got to have a lot more capital. If you want to just buy 100 shares of stock, well, then go buy one contract on the options market or sell one put and you'll own it at a cheaper price. If you don't get it, you collect the premium. So I'd rather use the power of leverage from other markets. Stocks would be my 3rd place, not just because of the amount of capital that we need, but I don't know. I think there's better markets out there. And let me see. Going to my 2nd place finisher here, we're going to go to futures. Futures is number 2. I love futures. I love the leverage. I love the diversity. I love that I can jump out there. And you know what? I don't know squat about soybeans, but if I see it on a wicked trend and I see that somebody like John Rowland is just pumping it up, or Don Dawson's talking about how the great trend on the soybean market or corn looks for the next 3 to 6 months, you know what? All right, I'll go with that. And just dabble in markets from around the world of things that interest me, whether it's coffee or palladium or platinum or, crude oil. I love the diversity. I love it. However, the thing that I don't like about futures, which is the only reason I think it's not number 1. Actually, no, it's number 2. It's a solid 2. The thing I can't stand about it is how contract specs change from item to item. Trading times change, minimums change, the amount you control changes, the maintenance requirement changes, margin requirements change, and those can change daily depending on risks within that market segment, right? We've seen, crude oil, the maintenance margin has been adjusted. Same thing on gold when it gets too volatile. Oh, we want more money. That just frustrates me and bothers me. So that's the only real negative flags I have against futures is the complexity of understanding the underliers. And contract specs changing. That's about the only real negative I see. The big thing, rollovers. Oh, the rollovers. I hate rollovers. One thing that really adds a lot of value to futures, however, is the 1256 contracts. So meaning you get a preferential tax split, 60-40, 60% taxable at long-term capital gains, 40% at short-term capital gains. That may not seem like a lot of money, but that can absolutely add up over time, especially if you're an active trader swinging some big size. So there are definitely some big pluses. It was tough, but my number 1 is a no-brainer for me, and it's just a matter of personal preference. Again, I think that options are the Swiss Army knife of the market. They're the most versatile, the most adapt to any market condition. I could have a stock going perfectly sideways, hasn't moved up 1 penny in 6 months. Well, I could slap a spread trade on that thing and be making money and consistently generating income from that thing going sideways. Whereas you'll never do that in any other market. It's got to move up or down and be directional for most assets. With options, you look at it and you say, what is it doing? Is it going up? Great, I've got my long strategy. Is it going down? Great, I got my short strategy. If it's going sideways? Great, I got my spread strategy. So much better, in my opinion, than any other asset class. With that versatility, though, comes extreme complexity. Now, if we use a knife example, let's say stocks. Okay, stocks is like just a Bowie knife. You got this big knife, it can do a lot, but it's more like a bludgeoning knife. I don't need directions, I know what this thing does. When I look at a Swiss Army knife, I'm opening up all these blades. I got magnifiers and corkscrews and toothpicks and saws. I'm like, what does all this stuff do? You got to learn them, right? You need to learn the Greeks. I think Lori was mentioning that one, or Lisa was mentioning that one. There's just so much that it can do. And if you look at the focus classes that Trading Academy has, we've got several different focus that specialize on different strategies. You've got straddles and strangles. You've got, okay, there was a whole bunch of different ones. I just can't remember off the top of my head. I think there's the trading for weekly income with options with Larry, which is, again, a different strategy. A variety of different programs out there that I think are beneficial to help you kind of master those strategies. But yeah, for me, options are my favorite. If I'm really bullish on something, I'm buying directionally long. Obviously, we have things like the IV gauge, which will tell you, is it better to be a buyer or a seller of options? As you guys know, I would say, having done this for 28 years now, probably my favorite thing is pretty simple. My favorite thing is to find a stock I like and sell puts at a level I want to buy it. And if it doesn't get down there, I keep the premium. I'm getting paid regardless of what happens with that security. I love that. I love that. So there you go. Let's see. I got a whole that triggered. I triggered some discussion on that one. Let's see. I think futures go on form 6781 for tax purposes. Yeah, but they're called 1256 contracts. I'm not sure where they go. Retired Jim says, I got to really finish that OTA options class. I think you should. Absolutely. If you started it, what probably happened, Jim, is you probably started it, got frustrated because it's like learning a whole new language. Well, review what you learned the first time, take some notes, go in there with your questions, and get rid of distractions. Don't bring your cell phones with you and be distracted by the things. Pay attention to whoever's teaching that class and absorb a lot of it, because it is, again, the Swiss Army knife. I think it's fantastic what it can do. Let's see. What else I got? Greeks, iron condors, straddles, and strangles. There you go. I have ADHD or I'm just lazy, and options are the way to go. All the others are like having... Mick, I'm in that category too. I have multiple accounts. My two biggest accounts now, other than my crypto, my two biggest accounts are just selling premium. And when you're younger, it's like I need to get my account as big as possible, as quickly as possible, right? I need to jump it up as quick as possible. So you trade the more volatile stuff, you take more chances. But as you get older, your accounts get bigger, and hopefully they get bigger and bigger. And now you realize I don't need to have those massive gains. What I want to make sure is I don't take big chances that could cause me to lose that capital. So for me, I'd much rather be an option seller. I'm going on things that are typically diversified. Yes, I know I was looking at SMCI. I'm also looking at Rivian. But typically I'm looking at S&P, Russell, NASDAQ, Dow, or those 12 ETFs that represent the market segments. I mean, I have literally a watch list over here on my screen, but all these bad boys right here I would click through every single day. Now, obviously, I'm not selling puts on energy right now or financials. It's at all-time highs. Forget it. Right now, there's the only one I'd really be interested in here is healthcare, because it's been beaten down. Premium is jumping up significantly here. So love it. Great. Maybe I'll look at selling the 137s, 135s, expiring maybe in December. I'll let you guys know. But healthcare, I'm not allowed to trade drugs and pharmaceutical, but this is more diversified. But yeah, I like to stay in the diversified instruments just because of risk factors. Now, you look at XLI and the Dow. Let's say I'm looking at the Dow. This 420 mark, conveniently 420, sounds great, right? If I get down here, I'll be happy owning it. Why? Well, look, it's still in an uptrend. We had a huge gap up. We'll probably close the gap and then continue to move up. So, yeah, I'd be fine selling the 420s on the diamonds right now. And not now because market's closed, but that's kind of the approach I have. I'd love to buy stuff lower if I can, and I generally don't chase. I don't juggle the chainsaws much anymore. The SMCI trade from last week or 2 weeks ago, that was definitely a juggling chainsaw trade. I even saw Big F mentioned that's my juggling chainsaw trade. Yeah, that was a risky one. Luckily, it didn't hurt much at all. A couple $100 loss, no big deal. I'm doing options retake next month in Houston, Forex and futures retakes in 2025. Good, Gary. Yeah, you ask about my preference. Hands down, options. I like it. And one of the other things I like is, I think many of you can appreciate this. Many of you have marriages and children and grandkids that you want to spend time with. In my early days, I was glued to the screen, literally glued to that freaking trading screen almost every single minute of the day. And while it was nice, I learned a lot. It was also stressful. It gave me my back pains. My eyes are all messed up now because of it. I have literally health conditions because of it. I got to the point now where I'd rather do a couple of trades and just let them ride for months, which is why I love selling monthly premium. I actually am going more towards weekly premium because I'm fairly active. But, if you are someone who's hands-off and has grandkids and wants to spend time with your family, man, you just look at the third Friday of the month, options expire, look at that market right before it closes and see if there's a security you'd like to own in 30 days at a much lower level. Get yourself a nice percentage rate of return on your capital that you're looking for, and just wait 30 days. Rinse, wash, and repeat. And as Margaret says, if I do buy, let's say I do get exercised on this Dow at 400. So I'll just put some lines on here because I will check this one out for tomorrow. 420, right? There's your 420 mark. It's not that far away. It could easily hit that. I'm going to put a couple lines on here so we can check the numbers. I'll go to December 20th is the expiration for December. Could the Dow, which is right up here at 432 right now, could it fall 2.98% by December? Absolutely. It could very easily do that, all right? No problem. We could easily get down to that level. But given the fact it's on this beautiful uptrend, I'm okay owning it. And as Margaret says, if all of a sudden I collect, I'll probably get 1% premium for that. If I'm collecting $4 worth of premium, great. That means my average price is going to be right around $4 or $416. Then if I get exercise, I'll sell covered calls on that one. And of course, if the market rolls over and start making new lows, maybe I'll just close my position out altogether because, again, I do think a change is coming. But right now, I'm buying into the trend, buy the pullbacks. Then I spend less time in front of the computer and go for longer gains over 1 or 2 days. Yeah, yep. I'm in a similar boat. I have, especially right now with the new roles and responsibility at Trading Academy and all the stuff going on. I mean, I feel like I'm just buried in so much stuff, different departments, different things, different initiatives. So I don't have as much time, selling an option and just waiting 30 days not to do anything. It's fantastic. Tilly Allison, who's one of my favorites, Tilly used to talk about in her strategic investor program, like, look, just do a monthly review of your accounts. Just look at it at the end of the month and go, okay, where am I at? Gains, losses, etc. Control, manage, open new positions, and then repeat it every month. If you're a longer-term investor, this attitude of I'm going to just keep putting money into my 401k and never do anything with it is not really a great strategy. You certainly want to have some market timing pieces to it. And I know a lot of you actually are holding big positions. Well, why not sell covered calls against your position and earn extra premium along the way? Where's the fun in that? It's all fun. Marcus, I do set and forget orders and trade them up in the next futures. Yep. All right. I think I sell 95. I sell options 95% of the time, and I've doubled my portfolio in 4.5 years I've been trading. Awesome. That's great. You're beating the normal market expectations. You're not taking high risks. To me, that's what this is all about. It's almost like, why aren't more people doing it? I just think the problem that most people have is they practice poor risk management. They take too many risks. So if you don't, if you forget about that stuff and you say, look, I'm looking at compounding slowly. I'm going to compound, take low risks, and go with things that aren't that volatile. Stay away from the high flyers, the exciting stuff. My mentor told me early on, at its best, trading is boring. And it's true. It absolutely is. All right, Liz says, totally agree. Options require such little effort. I traded one today. Amazon bull put for $11.22, sold $195, bought at $192. Nice. Closed at half my position at the end of the day for 70% profit. Love it. Holding the rest. Great. Awesome. I saw something about Trader's Arm in here. Let me real quickly go back up and see what that one was. Fury. Learn how to draw the Greeks and you'll understand options. I learned options from Corey. Yeah, Corey's great. Corey used to be a Trading Academy guy, and now he does Trader's Army with Chuck Fulkerson. And I don't know if they got all kinds of stuff going on. Chuck has helped me with my simple way to check my 401k once a week and using exponential, simple moving averages and get in and get out and go to cash. Yeah. And you know what it is, John? It's just rules. If this happens, I do this. If this happens, I do that. That's what it all boils down to. Years ago when I started doing the Trading Academy program, they didn't have a trade plan class. So, I've always had a trade plan, and I revise it all the time. And I finally said, we got to do a trade plan class, man. People come in here with a gambling attitude, a gambling mentality, and they're going to take all the chances in the world because they just don't know what they're doing right. They don't know what they're doing wrong. They're throwing pots at the wall to see what sticks. Forget it. That ain't the way to make money. That ain't the way to be consistent. You need to have a plan and follow those rules. So you know your rules. When this moving average crosses this one, I do this. And that's your strategy that you are using, right? I think that's the important part here is we are all different. We're all going to use different tools and resources. Just make sure you have a plan in place and you don't get too risky. When you sell puts, they're red a lot of the time until it gets close to expiration. Hard for people to see red. I don't know. Most of the stuff I don't see too much red on the puts I'm selling. I go pretty deep out of the money. I'm going, several strikes out. And this week I actually sold, and this one's I might get filled in this one. I sold what did I sell? The 950s? I can't remember. I think I actually sold the $10 strikes on Rivian again. That goes out to December 20th. I think with all this money coming in from Volkswagen, I think that Rivian will sustain this current EV uncertainty. Selling time decay is a nice strategy. Yep. Gotta love extrinsic value. Let's just sell it. Let's sell time. Let's sell ice cubes, right? I want to go to the beach out here in Southern California and sell ice cubes to people because I know I got customers coming back again and again and again. All right, so first off, thanks, Gary, for that question. I hope that I answered your question. If not, email me and I will get you further information about whatever area I was unclear on. Comparing markets, that's really what it was. Looking at the differences between them. If you have something, comments, questions, feedback, things you want me to discuss, email me at tradermerlin@gmail.com. Very quickly, let me run through our markets because it was fun today. Obviously, SMCI is one that everyone was talking about. It was up another big chunk today. It was up huge today and then came crashing back. No, 31% gain again. Just giant gains. It hit over $30 today. Now at $28. So, oh well. Shoulda, coulda, woulda. For our top 7 here, the 10-year drifted lower, right? We had actually a hammer formation here formed today because it sold off for the last 3. Then you got the little hammer formation, and we'll see if we can get a rip to the upside on that 10-year. The dollar index also selling off. We talked about it having a little bit of a pullback down about that 106 level. Kind of hesitating there today. We'll see. Crude oil, minor gain to the upside, spinning top formation, still overall, I feel bearish on it just because the overall trend, but I'm not taking any trades on crude oil, just too uncertain right now. S&P up 0.32% of the day. Again, none of the markets have really great moves. It just feels like a lot of chop. The only one that's really following through would have been this one on gold. We talked about that hammer formation and demand. Said if it gets above 25.85, there's your buy point. Well, we broke above that yesterday, and now you're at 26.31. So hopefully some of you grab that gold trade. NASDAQ, which is bronze metal place. Third place, I do like the way it finished. All right, you had this long bottoming red tail. It was negative for the day at one point and then came screaming back, closing near its highs. This is a very positive sign. And as Margaret says, tomorrow is the day. I get to change the capital letters there, Margaret. The way you wrote it, it says tomorrow is the day. Or is it tomorrow is the day? I don't know. We capitalized the whole dang thing, probably. And the reason is NVIDIA. We all know NVIDIA is coming out with earnings tomorrow, but I'll get to that in just one second. If you go here to the Russell, Russell also has a similar pattern to what the NASDAQ had. It was up 0.7%. And, of course, Bitcoin leading that charge. We hit another all-time high today, all-time closing high. Looking good. These fluctuations can be wild and gut-wrenching in crypto, that's for sure. But when you've got Michael Saylor over the weekend buying so much Bitcoin, you're taking out a supply. So now you got more people buying fewer Bitcoin. Love it. Keep going. I'm not selling mine for a while. We need a market crash. Yeah, we do. Right now, I personally don't care which way it goes because I'll be positioned for it either way. But yeah, I'd like to see a bigger crash and create a big buying opportunity at lower lows. All right, I'm going to get out of here before a 1-hour show. Obviously, tomorrow we have after market close, NVDA. There's your chart for NVIDIA today. I think a little bit of expectation going on here. 147, close up almost 5% on the day. Fantastic. I know people are going to be trying to sell options on this one because the premium is going to be really high. Just be careful, folks. NVIDIA is just way too dangerous. We talked about consistency and taking low risk. NVIDIA is going to be massive risk tomorrow after market close. That'll be your most exciting part. As far as economic announcements, I don't think I have Forex Factory up here, but let me just bring it up just so we can have the Forex Factory and talk about it. Hey, Chris, loving my crypto as well, my friend. If I could have just convinced your brother to buy some crypto, but no, old Kev, wouldn't do it. All right, so here is your calendar. Okay. Today, we really didn't have anything for the U.S. that was very bad. We saw building permits and housing starts were were kind of ugly. They missed expectations and showed declines overall. So that's not good. But let's go look at Wednesday. So Wednesday, as far as U.S. goes, you just have some FOMC members speaking. You've got member Cook, member Bowman, member Barr will be speaking in crude oil inventories, and that is pretty much it. All right, that's going to do it for me. Steve Wills, I would like to sell some covered calls on NVIDIA, but scared to lose it. Yeah, unfortunately. I mean, you could probably go really go. Like, if you're long on NVIDIA, all right, great. Thanks, Steve. You're going to make me do a longer show. Sure, Kev, of course he sold it. Way to go, Kev. If you look at NVIDIA, if you're long on this thing, right now, maybe you're not talking about getting a lot more, but Steve, if you want to make a little bit of extra, go to a level that's just way outside the normal, and you're like, it's not going to get there. And if it got there, would you be happy selling it? So does that mean the 170s? We're currently at 147. So you could get some premium for the 170s. I know it's there. Because right now the expectations are all over the place. So I would just make sure if you don't really want to get rid of it, and you're certain about that, then don't sell any calls. If you are, and you're like, well, I'll get rid of it, but it's got to go way up there, then go at a really incredibly high price. Go 180. See if you get some premium for it. All right. Anyway, we got to run, everybody. No 1 hour show today. Thank you so much. And if you enjoyed it, do me a favor, hit that like button. If you're new, hit the subscribe button. But there's nobody new here. It's all these same old folks. If you've got something you want me to talk about on tomorrow's show, let me know. Gary sent in the topic for today. But if you have something, let me know. Email me at tradermerlin@gmail.com or comment down below any of the YouTube videos. And I will see you guys tomorrow. Take care.